Your understanding of how to make money is going to alter. And changing money into other money is one of the simplest methods to create money. I'm referring to the foreign exchange market, commonly known as Forex, FX, and trade-in for a currency which is exchanged for cash and then converted back into cash. And the US dollar is the most badass in this world of money, coins, and profit. Let's learn more about this for today's video here at Cryptique. Welcome to Cryptique, a channel that gives critical evaluation or analysis, especially in dealing with crypto. Everything regarding money, finance, investing, cryptocurrency, and blockchain-related topics including ICOs, NFTs, and yield farming. Please subscribe and share this video. Also, do hit that like button. The dollar has played a significant role in the world economy since 1944, and current news seems to confirm this. Literally, experts advise against opposing the dollar at the moment since it makes currency exchanges the simplest they have ever been. It's that powerful and only getting more so. But how did things come to this? And how can we make money off of it? The first step is how nations trade. When two nations conduct commerce, it is much simpler if they can trade in the same currency. If Mexico uses pesos to purchase kangaroos from Australia, Australia might not be able to purchase pandas from China with those same pesos without first through numerous currency exchanges. Instead, the majority of nations maintain sizable reserves of US dollars for trading. There is more to this. Even if a nation's domestic currency collapses, it still needs to have access to a significant amount of valuable US currency for trade and perhaps more significantly for debt repayment. Massive sums of foreign currencies are exchanged for dollars every day at set rates, or the exchange rate. Additionally, factors like inflation and unemployment can have a significant impact on the exchange rate. Keep in mind what I mentioned about 3.5 seconds ago. Earning money requires change. This is why trading in Forex is so thrilling. In a time like this one, when it appears like everything is in complete disarray, daily change offers a daily opportunity to make money. Forex trading can be much simpler than investing in equities or virtual currencies despite the risks involved. I know you can already comprehend. It's merely money exchanged for money. Yes, there are more things that affect currency values than equities. However, there aren't any blockchains, weak indexes, or erratic CEOs trying to make jokes on Twitter. It's a decentralized market that is available 24/7 too. You could pause this video wherever you are, even if you're watching it at 3 in the morning, make your first Forex investment, hit play, and then pay out when it's over. That's kind of unrealistic, I guess. But the fact is that you can trade Forex pretty much whenever and however you like. The negative? You can find up investing in ways that are unrealistic, like, say, at 3 in the morning. The ability to invest little and earn a lot is the big draw, though. Yet how? And why is almost everything sinking while the US dollar is rising? Let's start with the how. When compared to equities, the percentages you make in Forex are less. And as a result, Forex brokers employ a high leverage strategy. Later, we'll cover high leverage in more detail. However, in general, brokers will permit you to borrow staggering sums, matching your investment at absurd ratios, which can equate to enormous sums of money. If your small leverage investment, however, fails, you could be in for some outrageous payback. Forex is still a rather simple concept, and you might already be profiting from it. Everyone needs a friend, even if they are just getting started. So why not be friends with the finest friend ever? A dollar. If you become a proficient Forex trader, you might start exchanging Iranian riyals for Brazilian reals, However, when you initially begin trading, US dollars should be your primary emphasis. It's the one to know because it serves as the world's reserve currency. It resembles English somewhat. Although it is utilized everywhere, not everyone uses it. Why is the dollar in this position? Why not use the euro, yen, yuan, or Bitcoin instead? Long story short, the dollar was backed by more gold than any other currency at a critical juncture, making it nearly as precious as the golden metal itself. Therefore, nations lacking in gold began collecting dollars, the next best thing. The world economy has moved away from the gold standard in the future. However, the dollar continues to be the currency that other nations hold in the greatest amounts, indicating that it is still in charge. However, that does not make it unbeatable. Like any other currency, the dollar may decline as a result of factors like inflation, interest rates, conflicts, natural disasters, and other newsworthy events. Even if the US economy is large and stable, there are still many internal problems. And because of this, the dollar is given far more of a break than other currencies. Want a flawless illustration? A country's currency often depreciates when it has a trade deficit or more imports than exports. The US? Since the 1970s, there have been deficits without any major problems. Additionally, it offers a few other advantages such as the low likelihood that the US will be invaded or subject to harsh sanctions. Perhaps most significantly, the dollar's strength is a result of comparison. Even though they are not doing well, the US generally performs better than most other countries when the global economy is in decline. The US dollar's foreign debt, which is largely held by China, is the most immediate existential threat to the US dollar. And we must not minimize this. It poses a severe risk, particularly as the Chinese yuan gains popularity as a reserve currency. However, the Chinese economy is currently too dependent on the export of goods to the US to take the chance of reducing the dollar's purchase value by demanding that America pay its obligations. However, in my opinion, all you really need to know is that the dollar really strengthens during times of international conflict, such as during, say, a pandemic. Because of this, currency experts practically everywhere are stating unequivocally that you shouldn't bet against the US dollar. Not now. Two of the most significant currencies in the world have had very difficult years. Compared to the dollar, the value of the euro has decreased by 20%. The yen has fallen 34%, and it seems likely that this decline will continue. As long as the war in Ukraine upsets the energy market, interferes with the trade of wheat, and generally makes everyone miserable, the euro will probably continue to struggle. Japan's national debt, meanwhile, is currently around 260% of its GDP. And for what I said previously, Japan has experienced a trade imbalance since last year, which means it spends more on imports than it makes on exports. That ultimately didn't become a big concern for the US. However, this greatly increased the risk that Japan's central bank would start printing more money, which would lower the value of the yen. And regrettably, just those worries are enough to lower the value of the yen. Therefore, once more, when events become ominous and investors start to take fewer chances, they turn to the safe haven they know best, the dollar. It is unfair. However, even when US misbehavior causes a worldwide recession, the dollar is stabilized by both the hope that it will rebound and the fear of what might happen if it doesn't. The dollar smile, a strength that makes you profitable, is the secret to almost everything exciting going on in the Forex market now. Okay, so you must first comprehend how one makes money from currencies. The initial trade doesn't result in any profit. Comparable to cryptocurrency, you profit from the turnaround. You exchange $1 and receive €1 back. Fortunately for you, the euro strengthens while you wait. Today, $1.15 can be purchased for €1. Therefore, when you convert your euros back into dollars, you receive $1.15, a profit of 15 cents. The long and short of it is that you need to invest a lot in order to turn a respectable profit without delving into the details. Leverage is another alternative, which increases both your risk and, more crucially, your potential for profit. Brokers who deal in Forex won't waste their time on little trades. They'll allow you to borrow at insanely high ratios to your initial investment, up to 1 to 400. 1 to 100 is more typical. You might therefore have $100,000 in purchasing power instead of $1,000 to trade with. According to the theory, $100,000 would be equivalent to 100,000 euros at a $1 to €1 exchange rate. You can sell the 100,000 euro back for $110,000, providing you $10,000 in profits less the interest on the $100,000 loan or on your own, if the currency rate swings so that the euro becomes 10% stronger relative to the dollar after your sale. You would have made $100 more money from that $1,000. However, because you used large leverage, your earnings after fees were over 10 times higher. Sounds fantastic, no? Why haven't you started doing this yet? It is because interest is accrued on your loan. Additionally, if the exchange rate never fluctuates, your broker will eventually demand their money back. And if the trade goes against you and is a loss, all that leverage is now going against you. And that's not simply a high risk. That's risky enough to make you want to liquidate your entire stuff. Do you feel up to that? So, if you think this video has clarified some things for you, please consider liking it and clicking that bell button to be notified of our new videos. Also, you might want to consider subscribing to our channel. It'll really help us out. Back to our video. For serious players, high leverage is a serious game. If you have no idea how the value of the dollar will change tomorrow, you really shouldn't play this game. It's possible that a US tech company may disclose a geothermal energy breakthrough, causing the dollar to soar. Or perhaps China will demand payment on America's debt, causing the value of the dollar to plummet. Yes, you can instantly turn a few hundred into a few thousand, and a few thousand into a few million. However, the same hundred can also be reduced to zero, or worse yet, to negative thousands. But here's the thing. While high leverage Forex may be the worst possible spot for you to begin active trading, low leverage may really be the ideal entry point with a modest and uncomplicated approach. And it's much easier than it seems in practice. You must have noticed me mention dollar at least 50 times by now, even if you haven't been paying attention. That's because your friend is the dollar. Learn about it if you want to exchange it. Check on its progress. Keep an eye on it, just as you would your grandmother. Then, concentrate on a few additional currencies such as the euro, real, or peso. Then keep a watch on information about the countries you're following, such as inflation rates, elections, and unemployment figures to see if you can see any transient patterns. When you do, you might be able to try out active trading. I have encouraging news for you, even if you have no plans of trading currencies in the future. First and foremost, it's crucial to comprehend how these things function and what experts are saying, because doing so can only help you better understand the world and increase your income. Second, by employing the dollar, you may profit from this dominance of the dollar. Inflation snatching their money has been one of the greatest worries for most Americans over the past year. It is utterly awful. But I was extremely relieved to learn that, despite the fact that the dollar isn't doing particularly well right now relative to almost everything else, it's still doing pretty well. Even by most investments standards, it's performing fairly well. Not only is the dollar strong, but it is also robust. Even when it dips, it constantly recovers. The dollar smile is a phrase you might recall. It means that the value of the dollar tends to increase like either side of a smile, regardless of how strong or how bad the US economy is. And even though I'm sure it won't last forever, we can be content knowing that for the time being. It's our best choice. And with that, this concludes our video. Acquired a lot of knowledge from this, we recommend checking out our other relevant videos from our channel. Also, consider sharing this video to any friends or family members who might find it useful. Until next time!